Victor Adair joins me on the line right now, live from the trading desk. I know Victor became introduced to Carly Rae Jepsen through Money Talks. Let's just leave it at that, Vic?
Okay.
Vic, I wanted to come back to the U.S. dollar here right away because that seems to be pivotal to so many trades, whether you want to see what the euro's doing, obviously the Canadian dollar's doing, even I think some stock values, that kind of stuff. So I wanted to start with your take on what's going on with the U.S. dollar.
Well, let me just steal a point from your opening editorial, reaction to extremes. That was a great topic. The U.S. dollar, the negative sentiment on the U.S. dollar hit a 5-year high at the beginning of this month. It's been trending down, fallen about 11% since December. And, on the flip side, the bullish sentiment on the euro, the bullish sentiment on the Canadian dollar, also at extreme high levels. Then you look at the U.S. stock indices, they're at all-time highs. Credit spreads are really narrow. In other words, somebody who's kind of a lousy person to repay or a lousy company to repay doesn't have to pay much more interest than somebody who's an excellent credit. That's what I mean by a quality spread. And then, of course, we know that volatility is extremely low across all asset classes. And when I look at the world the way it is, from that lens, as it were, I just think we're set up for change. And to me, the key is the U.S. dollar. U.S. dollar's down 11% this year. The U.S. stock market up 11%. Kind of the flip side of that. And here's an interesting thing. Well, Mike, you asked me a question. Sorry, I don't want to go on.
Well, but it's part of this too. Is that last week you said you took a nibble at the Canadian dollar to play the Canadian dollar to go down. From what you're saying here, you're comfortable with that, at least at this point.
Yeah, well, I'll use a lot of different indicators, and certainly the extreme sentiment. And by the way, I got another great note this morning from my longtime friend Ross Clark, who's had some great technical analysis on the Canadian dollar and other currencies, and he was pointing this out, how that Canada had just got way too far ahead of itself. And it was, last week or something when we had the Prime Minister of Canada's picture on the cover of Rolling Stone magazine the same day, for crying out loud, the Petronas cancels the $36 billion LNG project. And I just thought, well, I took a little short position. I added to that short position, and this was more disciplined, this week when we took out the previous week's lows. Ross is thinking that Canada's got at least another 2 to 3 cents to go to the downside, just a correction, if nothing more, in the rally we've had from the May lows. But let me give you this point of view, okay? Canada started the rise 5th of May in lockstep with crude oil, but then when crude oil rolled over and started falling, Canada kept going, carried on by the hawkish Central Bank of Canada story. So Canada rose from 73 cents to 80 cents in May to July. So did the Australian dollar. Exactly the same, 73 to 80 cents, same time period. While Australia, their central bank was saying, no, I think we're just going to leave things the way they are. And by the way, the currency's too damn strong. So the takeaway from this, it's about the U.S. dollar, not about the Canadian dollar, not about the euro, not about the Australian dollar.
Well, good stuff as always, Victor. We'll be checking in with you next week, of course, and following the trade, and I couldn't agree more with you. The U.S. dollar's holding the key. Victor Adair, you can find him at polarfutures.com?
Yeah, polarfuturesgroup.com. That's the website for myself and my son, Drew Zimmerman.
Great stuff, polarfuturesgroup.com.